Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Thursday, the 31st of October in London. I'm Stephen Carroll. Coming up today, Labour's Rachel Reeves raises UK taxes by £40 billion to fund a £70 billion increase in public spending in a massive bet on big state economics. Microsoft and Meta results fail to excite markets as artificial intelligence creates expensive headaches for the two tech titans. Plus, does a long queue for your morning coffee put you off Starbucks? The chain's new CEO thinks it does, and he's vowing to get wait times below 4 minutes. Let's start with a roundup of our top stories. Rachel Reeves has delivered one of the largest packages of tax hikes and investment plans in post-war UK history in a bid to revive the economy. The Chancellor announced some £40 billion of annual tax rises in her budget, hitting employers and the wealthy hardest. She says she was forced into fixing the previous government's mistakes.
I accept that this is a big and a substantial budget. It wasn't the budget that I was expecting to deliver when I became Chancellor on the 5th of July. I didn't think that any government would be so reckless.
Businesses expressed concern about the scale of Reeves's tax hikes, which would hit a post-war high. But the International Monetary Fund endorsed the Chancellor's plans, citing the needed increase in public investment to boost growth. The Chancellor also announced a £100 billion increase in capital investment. The Office for Budget Responsibility, though, says it will only lead to a short-term jump in growth. Bloomberg's chief UK economist Dan Hansen explains why.
You have this boost from capital spending, so you get a bigger economy because there are basically more machines in the economy that we can all use and we're more productive. They take away from the supply capacity of the economy through higher employer nicks because it passes through to wages and that affects the incentives to work. And the final thing the OBR have said, which is completely against Reeves's narrative, is that it crowds out private investment, doesn't crowd it in. Why? Because interest rates are higher as a result of this policy package.
As Hansen notes, the new government has made boosting public and private investment a core tenet of its bid for growth. Bond prices fell after the budget as investors digested the prospect of historically high debt issuance and fiscal stimulus that could mean Bank of England interest rates stay higher for longer. The LA Dodgers have won their second Baseball World Series in 5 seasons. Here's how it ended.
The Dodgers a strike away from a championship, from a proper celebration. Start the party, Los Angeles! Your Dodgers have won the World Series!
Broadcast on Fox Sports, the victorious Dodgers overcame a 5-run deficit with the help of 3 Yankees defensive miscues to beat the New York team 7-6 in Game 5 on Wednesday night. Freddie Freeman continued his rich vein of form during the matchup and was voted series MVP. The superstar shortstop hit a 2-run single to tie the series record of 12 runs batted in, set by Bobby Richardson over 7 games in 1960. The Yankees' loss means New York remains without a title since 2009. Microsoft shares have fallen in post-market trading after the firm forecast slower quarterly cloud revenue growth. Executives say sales from the Azure cloud computing business are expected to grow by 31 to 32% in the current quarter, slower than the previous expansion. But CEO Satya Nadella says the unit is attracting more customers.
We are seeing continued growth in cloud migration. Azure Arc now has over 39,000 customers across every industry, including American Tower, CTT, L'Oreal, up more than 80% year over year.
Satya Nadella speaking there. Microsoft shares reversed an earlier gain and fell about 4% in extended trading. Meta has warned investors it will continue to spend on AI and other technologies. That's despite executives predicting losses from the firm's AI and augmented reality division will continue to widen meaningfully this year. CEO Mark Zuckerberg says the heavy investment will be supported by Meta's ads business.
First, it's clear that there are a lot of new opportunities to use new AI advances to accelerate our core business that should have strong ROI over the next few years. So I think we should invest more there. And second, our AI investments continue to require serious infrastructure, and I expect to continue investing significantly there too.
Mark Zuckerberg speaking there. Meta shares fell more than 3% in extended trading. And China's economy is showing signs of stabilising after Beijing's recent stimulus blitz. Government data shows that factory activity unexpectedly expanded in October after 5 months of contraction. The official Manufacturing Purchasing Managers Index rose to 50.1. That's higher than the slight contraction that economists had predicted. The upside surprise comes after China made forceful cuts to interest rates and unveiled measures to bolster the housing market amid fears over slowing growth. In a moment, we'll dig into some of the detail from Rachel Reeves' first budget and what it means for the country's finances, plus look at more detail about what we learned from the latest set of big tech earnings. But first, a story that caught our eye here. How long does your coffee order take? And does that put you off going to Starbucks? Well, the company's new CEO thinks it does. Brian Nicholas set a goal of getting drinks to in-store customers in 4 minutes or less and ensuring that online orders are filled on time. He's also bringing back self-pour sugar and ceramic mugs in a bid to make the Starbucks experience feel less like fast food. The chain is also going to shake up its food and beverage menu, trimming back some of the options. Brian Nicholas vowing to take a more disciplined approach to product development. He says the company has strayed from its own process in recent years. This was a big address by the new CEO to investors, the first time since he took the company's helm. This is as there's been a whole range of challenges facing Starbucks. Its fourth quarter results revealing the depth of the problems that Nicholl has to fix. Same-store sales were down by 7%, the third consecutive decline, negative numbers across all regions. Profitability also down from a year ago as well. And much of these numbers had been released before the earnings report, but this is an idea at least of how Brian Nicholl plans to turn around the coffee chain really since taking over as leader. Let's bring you more details now on the UK budget. The Chancellor says it's a plan to rebuild Britain, but already there are warnings the £40 billion of tax hikes may not pay off. For our UK politics reporter James Wilcock joins us now for more. James, economists and other commentators have been pouring through the detail of what the Chancellor promised. What kinds of things do they have to say?
Well, everyone has a lot to say around the budget, Stephen, but that's because it's so big. I mean, economists are all pretty agreed that it is big on all accounts. You have a massive 40 billion sort of tax rise, which is one of the largest in history, well, UK history at least. And then that is going also to go into investment with fiscal rules loosened to add an extra sort of £30 billion to the economy and spending to go into the public sector. Now, where this kind of breaks down, you can broadly break it down into three groups, right? You've got the economists who have all those figures and facts from the OBR, but then split down on kind of the level of public debt they see as appropriate. I mean, the IMF, the International Monetary Fund, have backed this budget and said there needs to be more public investment and there needs to be more taxes to pay from it. The IFS, who don't make political judgments, do point out sort of the inheritance from the Conservatives is dire. But then you also have someone like the IEA, Adam Smith, the kind of more conservative kind of economist think tanks who point to sort of the growth hit from tax rises going up. Then you have business groups. Now, the CBI call this a tough budget. The British Chamber of Commerce echo that, going with a tough budget. The Institute of Directors call it a painful budget. So pretty difficult words from the voices of business across the country. However, it's still guarded in that. I was talking to a source in the city yesterday who said a lot of the trade bodies have been softer than they expected in coming out against this budget, given you've got a rise in national insurance contributions from employers, capital gains tax, and other sort of ways that are going to hit business. And this source said to me that it's going to be a kind of big, painful, wipe the slate clean budget, and they're hoping this will be the end of kind of difficult tax rises. And then you've got the Conservatives, the more political groups, who make the fair point that this are some of the largest tax rises in history, coming from an election campaign where the Labour Party promised quite a limited set of levies in that election. And you can see that in some of the kind of press coverage this morning on the headlines of some of the papers, where you've got things can only get better, the great tax gamble, and then some interesting going on the fuel duty stuff, which goes to show that some of the more consumer-focused measures by Reeves are cutting through. You've got stuff on fuel duty, then also on pints. So there is sort of some of the camouflage, some of the very big tax measures and some of the more giveaways she had going on.
Politically then, has Rachel Reeves delivered a budget that her party and the country can get behind?
I think to answer that question, you have to bear in mind two charts that are in anyone who covers UK fiscal problems' mind. They are GDP per capita, which has remained stagnant since 2010, and public-private investment, which has also been very, very difficult to get up since Brexit. On those, the choice that the Chancellor is making is people want better growth and they want better public services, and polls suggest they're willing to pay a bit more to get it. You can see that in polls asking people if they would pay more tax for the NHS. Interestingly, it's the NHS that's getting the big boost for spending. Now, it's kind of too early to say if this is something the country can get behind, because the big unknown question, which is one that the OBR have taken a stab at in their forecast, is will this create growth? And the OBR's view is, in the sort of long 50-year term, yeah, sure, in 5 years, not really that much more than the Conservatives, and in 2 years, yes, there'll be a short bump. And so that's a forecast, though. It's worth bearing in mind. It's one the markets will take their read from. But the question as to whether the country will get behind this in 4 years is growth better? Are public services going to be better? Now, there's more money going to be into them, that's for sure. And that's the choice Reeves is making. Higher taxes, more money to public services, and the hope is that will create better quality of life. And the gambit she's taking is that will also create better growth. If that happens, Stephen, that would be a budget the country can get behind, but it's a bit too early to say at the moment.
What comes next, James? What do we need to watch out for as the process continues?
I think the big question is, where is this money going? We don't yet. The budget bill has only just happened. It will now be passed into law. It will be debated. There is so much yet to see from this Labour government. Industrial strategy, a civil servant spending review. One big danger zone here is, although the NHS is getting a lot of money, a lot of other departments are going to face real-term cuts. Whether that is realistic, i.e. whether when the government has to spell out what those cuts actually means in terms of civil service, in terms of what actually the state does, I think those are big problem areas as well. Although we've got the big headline figures now, and my God, they are big, how that is actually enacted and facilitated by government is all yet to play for.
OK, James Wilcock, our UK politics reporter, thank you very much. Let's turn to some of the latest big tech earnings, shedding more light on divergent themes in the chip sector, and the latest on AI as well. We've been hearing from Samsung, from Meta and from Microsoft as well. Let's go to Annabelle Drulers for more on this story. Lots to unpick here, Annabelle. Let's think about the hardware side of the equation. What have we learned?
Yeah, that's right, Stephen. I mean, there's been several different themes that have sort of developed, given we've had a number of companies reporting in the last 24 hours. But Samsung has been really one of the standouts in Asia so far today, and it really just told us two different stories. On the one hand, there was concerns that Samsung wasn't doing enough to catch up to another Korean company, SK Hynix, in the HBM space. High bandwidth memory chips are critical to AI infrastructure, and there were concerns, as I said, that Samsung was falling behind. When Samsung said actually it had been making progress and it was looking perhaps to get certified by NVIDIA later this year, that actually gave rise to the share price flipping back into positive territory and gaining as much as 3%. So it tells you there's still that demand around AI chips, and investor sentiment is moving strongly toward that. On the flip side, there's still concerns around legacy chips as well, and that again came through in Samsung because they were saying that the outlook for consumer electronics isn't strong. There was another company that reported today, for instance, Renesas there in Japan, but focused on legacy chips for the automotive sector in particular, and that stock slumped, given it gave a forecast for the automotive sector in particular for chips that was weak. And so again, it's that sort of theme that we're seeing develop, where legacy chips, we're still mired in that slump, trying to recover in that space. AI chips, though, they're still strong and attracting a lot of investor demand.
OK, so that's the hardware side. What about AI services? We're thinking about what we heard from some of the big Silicon Valley names.
Yeah, that's right. And you were just playing that soundbite there from Mark Zuckerberg, for instance, from Meta before, saying that they want the advertising business essentially to pave the way for their investments into AI and other futuristic technologies. And there's certainly been that tug of war at Meta, where we've seen investors at different points of the year sort of impressed by the gains that Meta was making in the AI space, and at other times sort of shedding some concern or sharing some concern around them spending perhaps too much but not getting any ROI. ROI. And that came through in these numbers because Meta, we saw them actually dropping around 2.5 or 2.8% in extended trading. Microsoft was another one as well. They actually gave a forecast for their cloud business that was a little bit weaker than what analysts had been expecting. It's not actually a story that the demand isn't there because we had those Alphabet numbers. That's another cloud company for AI early this week that indicated strong demand. There is that demand from businesses, but Microsoft doesn't actually have the capacity in place just yet. And so in that push to ramp up their cloud business, that could actually put a bit of pressure on their margins. And again, we did see that stock moving a little bit lower in late trading as well.
Okay, Annabelle Drillers in Hong Kong, thank you very much on some of what we've been hearing from those big tech companies. Now, what would you like to hear about on Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg audience survey. Visit youtube.com/Bloomberg podcasts and click the link in our profile or community section to take the survey, which is hosted by our partners Material. Fill it out now at youtube.com/Bloomberg podcasts. This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.